everyone, and welcome to The Hash. My name is Naomi Brockwell. We have Ben Powers, Jen Sanasie, Will Foxley, Zack, Seward, and we bring you every day at 12 on The Hash, the latest and greatest in crypto and culture. And we're going to start off today by talking about a new acquisition. Zack, what's going on there?
We're talking about M&A stuff. We are reporting the confirmation of a scoop that was first broken by Ian Allison last month that Galaxy Digital is indeed buying BitGo at a deal valued at $1.2 billion with a B dollars, which is pretty crazy. We'd actually heard that number a couple times in the reporting process, but held off from reporting it. So I'm feeling pretty good about our work getting that one on the record before the announcement went live this morning. So big time M&A season. This is crazy. This is $1.2 billion. This is a really big amount of money for BitGo, which is a crypto custodian and crypto services firm. They also run Wrap Bitcoin, which is a fun way to get Bitcoin on the Ethereum blockchain and into the world of DeFi. So this is a really big move with a really big number attached. It really speaks to the moment, really speaks to the market. And I'm going to toss this one to Will for his take on what this suggests about the crypto market right now.
It must be spring in the air. Everyone's looking so good today. I mean, Zack, your hair is just nice and poofy, and I love Naomi's shirt. So quick notes
today.
there. Quick notes.
Thanks, man. Appreciate it.
But this is Ben and I, first of all.
Is this our style?
You guys are looking good. You guys don't need any compliments. You already know you're looking great. Looking at this valuation, $1 billion. That's double the valuation that we saw for a rumor that went around in the fall for PayPal buying BitGo as well. And that number was like 750 million at the time. I think that it was in October or November when that kind of circulated around. And of course, these larger players are always trying to buy the smaller players, and those numbers kind of come in and out, and deals sometimes close, sometimes they don't. So props to Ian Allison for closing this and getting everything right on this. Just a testament to he's one of the best in the business for a reason. So going back to the main story here, $1.2 billion, obviously like that is a huge number, great headline there. But it speaks to the custodian needs that players like Galaxy Digital need. They need to have infrastructure on the back end. It's not necessarily interesting to the normal person, but you need that to make these applications work. Like you have to have it. Otherwise you can't offer crypto. You can't offer a suite of services that a firm like Galaxy needs. BitGo itself is interesting because they actually have like a very robust tech package. I think we've noted on the show that they have Wrap Bitcoin, which is one of the largest liquidity providing assets for the DeFi industry. And if that industry is only slated to grow, then Galaxy Digital itself is going to become a larger and larger part of decentralized finance. So I think that's a cool little nugget just from a tech perspective that Galaxy Digital has purchased one of the biggest players in DeFi, and that I think that valuation is kind of low. Like they could, that's kind of a steal in my opinion.
Yeah, BitGo also has a bunch of Bitcoin on its books as a reserve asset that was revealed, I think, a few months ago. So, yeah, really interesting number attached to this news. It's not the only crypto M&A that we're watching today. Blockchain.com also made an announcement, probably surely smaller than that $1.2 billion acquisition that the Galaxy is pursuing. But, again, just kind of speaks to, pockets are fat right now in the crypto space, and this consolidation is not going anywhere anytime soon. I'm going to toss this to Naomi. I mean, we're seeing, a crypto native company publicly listed in Canada, also eyeing a U.S. listing soon, gobble up another crypto native company that's pretty important to the space. What's your take on the news that was confirmed today?
I mean, it's a huge number, as Will said. It's like it blows my mind to be seeing all of these billion-dollar figures thrown around in crypto because we all expected this to happen. We knew that cryptocurrency was the future, but the fact that it's here and we have such large numbers is kind of daunting. And I think that, when you're talking about custody, as you already said, Zack and Will, it's just such an important part of the crypto space. I was actually chatting with a 501c3 this week about accepting crypto, and they mentioned how they have this custodian they work with and they transfer it to fiat. And I'm like, well, you could just hold it yourself. And there's still such a barrier to entry for people, like if you have nonprofits or you have organizations, there's a huge technological barrier to entry for people to hold crypto that a lot of us in the industry maybe overlook. So I think that for an average person, especially when you're dealing with something like cryptocurrency, it's not like there's FDIC insurance that's backing it up if you lose it or it gets hacked or whatever. People need to have control of their assets. And a lot of people just aren't comfortable with that yet. They're not comfortable with the idea of taking responsibility for their money. So then you have these custodians coming into play that are just making up a huge part of the ecosystem and, filling that gap for those people. So it is interesting seeing that become a larger and larger part of this decentralized world. But now it's just, it's filled with all of these custodians, which is interesting. But I'm still a fan because people have the choice to custody their own assets if they want. They have the choice to send it peer-to-peer if they want. If they're not comfortable with that, they can still make the system more robust by adding liquidity and using these custodians.
Yeah, I think it's just like M&A season all day right now. And I think this kind of soaring acquisition prices, I think are indicative that there are a limited number of crypto firms, like native crypto firms out there that can do these sorts of things. And they're quickly getting snapped up. So I think as that, just kind of pool starts to decrease, we're going to see further and further buys at higher and higher numbers at this point in time. But I thought what was interesting about the BitGo thing, and Will, you kind of referred to it, was just sort of the sort of DeFi plugin there and how that could be really interesting. And I think when we saw, for example, Coinbase go public through direct listing, they were saying, at the time that, hey, DeFi is kind of a competitor to us and is a threat. And I think now as we see these firms get acquired and start to move heavily potentially into allowing more users into that space, that might be the kind of Godzilla King Kong war that Coinbase was thinking about down the line. So I'm going to be really curious to see how this further develops as as you said too, Zach, Galaxy Digital also as a public listing in the US.
Naomi, I have a question for you. You spoke about the technological barriers for people in the space. And I think there's also an educational barrier and regulatory concerns. And so do you think that people just think it's safer to be using custodians?
I think that, to be honest, when I've actually talked to these companies and drilled down on what their issues are, it turns out that they're just kind of scared of looking into it. A lot of these places, I mean, from my perspective, it's quite easy. My entire job consists of trying to teach people about how easy it can be and to kind of smooth that process. But, a lot of these people, there's a lot of buzzwords. It's a new technology. There are concepts they don't quite understand. When you explain it to them, they get it. And they're like, oh, okay, that's doable. But it's just kind of this insurmountable barrier with all the language, and it's just a very technical field. So I think it's going to take some time for people to get comfortable with the concept. But let's change track here. I want to talk about the Wall Street Journal, who hosted an online summit yesterday, and U.S. Treasury Secretary Janet Yellen spoke there. There were a few topics that came up that got the crypto community's attention. So the first comment was where she actually toned down her remarks earlier, suggesting that interest rate hikes may be needed to stop the economy from overheating. When she said this, it was kind of shocking, but then she backtracked on it, and then she said, oh, actually, it's not something I'm predicting or recommending. Now, obviously, Janet Yellen is not the Fed chair. So this is not her jurisdiction. I think a lot of people look to her as what are the rates doing? Oh, Yellen talked about rates. It's going to affect the economy. Well, actually, it's not her purview anymore as a U.S. Treasury Secretary. But even so, when she backtracked on the remarks, you have Bitcoin responding to that. It shot up 6% today. Pardon me. Which is up over 57K at the moment. And I think that's because a lot of people are looking to the continued money printing that the US government is going to be doing and seeing crypto as being a continued hedge for that. So I'll throw this to the group for now to get your thoughts on these initial remarks. Then we'll go to her other comments. Ben, what are your thoughts on this?
I thought it was interesting. I feel like we talk a lot and maybe we forget that she's not the Fed chair, right? So this isn't her purview. And even though people might be directly kind of reacting to that news. So, I think we're going to see a lot more talk in this space, particularly as we see, the US in particular start to open back up economically and how, the Fed and others are going to be measuring against that. And then how people react to potential volatility by hedging their assets in a few different ways. So this is just something I'm going to continue to watch, but I don't have any particular thoughts on this one.
For sure. Will?
I'll snag it. I don't know if anyone else feels this way ever, but isn't it wild that an economy of 350 million people is reacting so strongly to one person's comments? That just always shakes me that is the system that we've created. And that economy of 350 million people is the steering of where the world economy itself goes. And so we have one or two people, you have the Fed at the top deciding where all of the market is going. And her just doing like a little hiccup on stage has created all this uncertainty in the last few days. And you see that in the prices of assets changing all over the board. And even you see in the Bitcoin price moving up and down. So that's just like my note, is like, it's always just seems incredible that we've created this system where someone at the top can roll a pebble down the hill and becomes boulders all the way down to the person on the bottom who has to deal with these asset prices changing. I don't know, and I don't have any opinion necessarily on the monetary policy side of this. Of course, Bitcoin is supposedly an answer to the actions of the Federal Reserve and the actions they choose with interest rates and money printing. So I'm glad that we have that as a way to kind of get out of the system. But just from a purely sideline perspective, I always just find it fascinating how the market reacts to one or two figureheads kind of sneezing on stage.
Yeah, for sure. And I want to take us to another shot that she made on stage. And so let's play her next soundbite.
I think cryptocurrencies, we don't really have an adequate framework to deal with the different issues that they pose from a regulatory perspective. There are issues around money laundering, Bank Secrecy Act, use of digital currencies for illicit payments, consumer protection, and the like. And while there are several agencies that arguably have some ability to address this through regulation, I frankly don't think we have a framework in the United States that is quite up to the task of putting in place a regulatory framework that we need in the future. So I think that's a topic that's...
Oh my goodness. So this is definitely hinting at the creation of perhaps yet another regulatory body that is going to be crypto specific, or maybe some task force that's like, cross-organizational task force. You've got all kinds of different agencies in government that are trying to figure out cryptocurrency. You've got the SEC and the OCC and the CFTC and the whatever other, letters you want to throw in there. And they're all trying to regulate this in a different way. It's interesting, last year, former SEC Chair Jay Clayton said in a conference, don't pretend that it's a payment vehicle when it's actually a financing vehicle, because he wants it to be an SEC purview. I think a lot of these regulators miss the point that it's like an entirely new asset, and it could be all of these things at once, and some people may just be using it as a payment vehicle, etc. So I'm not excited about what this new regulatory task force is going to come up with, but what does the group think about this? Ben, what are your...
I do have thoughts on this one. Oh.
Or Ben first and then Jen.
Okay. No, I think this actually makes a lot of sense. I think that, in kind of the ecosystem of regulation that we're looking at, it's been so piecemeal and so kind of like still gray zones, like half measures, half rulings on these things that are creating more confusion in the market in a lot of places. And Naomi, you referenced like all these different agencies vying for this regulatory power and saying, and kind of re-articulating crypto in a sense that it fits within their purview. So this is actually kind of a positive development in my mind. Like, if you're going to have an agency, like, have it be pointed and specific and look at crypto for what it is. Like you said, a new kind of class of assets and cash and everything else entirely, than like a vestige of like the old system. And I think like if they were to do this, we wouldn't be saying like, oh, like, Gary Gensler, like, how does he feel about crypto from his perspective and his agency now? It would be saying, like, we're going to bring in people to specifically look at crypto in a pretty, hopefully narrow way. And to me, I think that would help in terms of getting clarity, because right now I still think there's so much confusion, and that affects, the markets and funding and startups and all of these different people in the ecosystem. So I actually think this is a good idea.
And Jen, what are your thoughts?
Well, Ben, do you think that what you've just explained can actually be executed on? I mean, we hear we hear this all the time, and I don't think we've seen it actually executed in a way that works for people. And I'm just, again, I have to say this, money laundering and illicit payment narrative is one that I feel just gets people riled up, but there's no intelligent conversation after that, and there's no action. And so hearing this was frustrating for me.
Yeah, I guess like my...
Sorry, go ahead.
I was just going to say, like, I chose not to deal with the AML money laundering stuff. Like, we've had that conversation so many times on this show. It didn't feel worth rehashing in this instance. But I don't know. Maybe it was just news to me. But like, this is the first kind of what I had heard about like a whole new agency. Whether that can happen, again, that's a bureaucratic question. That takes a lot of other follow-on questions to be answered, Jem. But to me, this seemed novel, at least in that sense, rather than, tacking an old system onto this new idea.
Can I make a request that if we do create this new task force, I'm not going to be happy with it unless Hester Peirce is in charge of it. Like we need Crypto Mum to oversee it and actually bring some rationality into this space. Actually look at it from the side of all of the amazing, jobs that are being created, this entire industry that's been created. Make sure that we safeguard that. But Zack, what have we got coming up after the break?
After the break, we are going to go to Sports Desk, looking at a NFL partnership, a new crypto deal with the old New York Giants, that rising tide of crypto sports stuff. So stick with us. We're going to have a break, and then we'll talk about that. Thanks.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Hello, you're watching The Hash, where we bring you the latest and greatest in crypto and culture. So the New York Giants have signed a sponsorship deal with Grayscale Investments, making Grayscale the official digital currency asset management partner of the team. So this is really big news. They're doing some really interesting things with the team. They're not just a naming sponsor. They're working with the team and staff on crypto education. And so I thought this was really cool. I'm going to send this right over to you, Zack. I know that you have thoughts on this as the official sports desk of the show. So
we all know that's Naomi, okay? Ever since Will dunked on me so hard that time. Yeah, all right. So here's those Grayscale guys again. Just, full disclosure, Grayscale and CoinDesk share a parent company. That parent company is Digital Currency Group. So just let that be known. This is interesting to me just in terms of it following on the heels of like the FTX Miami Heat naming deal. There was like a smaller little deal in the NHL with Crypto.com and the Montreal Canadiens. And now we have the NFL hopping on board with this sponsorship deal with Grayscale. I mean, I don't really get it. That whole thing you said about like the official digital asset, blah, 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 blah. That was like a real big mouthful. I do think the interesting stuff is like the additional stuff that will follow on top of just like, having their name in the stadium or something. The crypto education stuff. Sort of there was a hint in the announcement that like Grayscale could be sort of like the Giants' guide to future cryptocurrency, activations or experiments. So the fact that the NFL, well, no, not the NFL, but the fact that the Giants are thinking in these terms is quite interesting, right? Who knows what this means? We've already seen like a rash of like laser-eyed NFL football players on Twitter. So maybe we'll see more of those laser-eyed football players taking their salary in Bitcoin once they have their educational coursework done with Grayscale. So, interesting. Again, sports crypto seems to be this weird sort of like nexus of a lot of activity lately in this market. And this is just another sign of that.
Well, we've been talking a lot about how sports is maybe the gateway drug into crypto for a lot of the mainstream audience. And so it was interesting to me to see how quickly the NFL is moving. I'm not a huge sports fan, but the NFL always seemed to me like an organization that felt like they moved slowly and they were kind of stuck in traditions and old ways. And I think, Will, you would tell me that they really just like money.
I would. Yeah, I feel like I'll give it to Ben first.
I was going to say they move slowly when it comes to protecting, the health of their players and things like that, particularly during a pandemic. But hey, whatever. No, but I think this is interesting because what stuck out to me here was like the educational aspect of it. We talked about crypto more generally, and I was really curious about, if the NFL, during their kind of rookie financial seminars and stuff would start to include crypto as like something to look at in terms of diversification, because you do see so many people run through their like rookie contracts so quickly. And I think that this is really interesting because they talk about this as like, for Giants personnel, and I would imagine that includes players too. And I think just having that guide is an important step for like, people accessing it, getting educated about it, and also like diving in deeper, right? Like I think Grayscale, the first step of this is like obviously maybe look at Bitcoin or something like that, but Grayscale looks at a bunch of different kinds of cryptocurrencies. It's not so narrow. And so them being able to kind of intro players and, other personnel, I guess, to the kind of broader basket is going to be really interesting. But I think you're going to see most likely more of this. This seems like a pretty substantive engagement. Like Zack said, it goes a bit beyond the naming rights and things like that. But if you see more teams doing this, I wouldn't be surprised to see the NFL maybe writ large follow suit. And again, it makes sense for the Giants. They're in New York City. A lot of kind of crypto people are headquartered here and things like that. So.
They're in East Rutherford, New Jersey. Okay, get it straight, Ben. They are the New
okay.
The Buffalo Bills are the only New York State football team. I just need to state that for the record. But yeah, I mean, I think the sports crypto thing is interesting, right? It's like probably there's a lot of demographic overlap. Like crypto tends to be pretty heavily male, tends to be pretty young, and so these companies they have these profits, so they're looking to do a marketing spend on, and they say, hey. Okay, yeah, I will buy the naming rights to the Miami Heat Arena. Sorry, American Airlines, it's the FTX Arena now. And they probably see that as a decent place to park their marketing spend if they're trying to capture more of those, more of those consumers. So, I guess the sort of the demographic overlap would make sense. But I'll throw it back to you, Jen.
Well, Zack, you mentioned that the demographic is pretty heavily male. And so we're talking about sports. That's a mainstream audience that's made up of a lot of guys. Naomi, I want to ask you, what mainstream event or entity needs to start supporting crypto to get the women involved?
Obviously, Taylor Swift. And I've been trying to get in touch with her for a really long time now. She won't return my calls. She won't return my texts. I camp out in front of her apartment. I get ushered away by bodyguards. It's really strange. It's like she doesn't even like crypto. Right now. But in all seriousness, I think that, you're going to have to start offering products that are more interesting to women. And if you look at mainly female demographics, like a Taylor Swift got it, that might be a good place to start. So I'm only half joking there. I actually think that, if she were to get involved, it would be a huge boost because everything she touches turns to gold. She just has this remarkable ability to turn bad marketing, bad press, all of these things and just switch it and make a ton of money. So I would be very interested to see what her crypto play would look like, but I hope it would be like a good decentralized one and not some really bad take. I can definitely see both happening.
You guys could team up on something.
I'm so excited for that.
Let's do that. You put me in touch, Jen, if you got connections.
Yeah, I'll have my people call her people.
Yeah, let's change track. Let's talk about what's going on with the NYDIG.
That's right, NYDIG. So NYDIG is giving access to some 300 million checking accounts to Bitcoin via an integration with Fidelity Information Services. So this is actually pretty huge news. The fact that 300 million checking accounts in the U.S. are going to be able to access Bitcoin once this integration rolls through. So on the backside, what it looks like is whatever bank subscribes to Fidelity Information Services has the ability now to use Bitcoin and buy Bitcoin, procure Bitcoin from NYDIG. NYDIG would be the holder of that Bitcoin and would custody it for users. But then the banks themselves would get the transaction fees and everything associated with the purchases of that Bitcoin. So it's a huge step in the adoption game of Bitcoin, especially as an investment. The fact that all these accounts across the world, across the US, can now access Bitcoin instead of having to create an account on Coinbase, to create an account with Cash App or some other typical way of buying Bitcoin. You can do it directly through your own bank account now. So I think that's some of the biggest news of the year, frankly. And the fact that NYDIG has done it again is really interesting because a year ago, I didn't know their name. And I think 6 months ago, they started making some loud noises with Mass Mutual and Morgan Stanley, some other players that they started servicing. And now here they are servicing every single or a large clientele of U.S. banks in the U.S. Excuse me. So I want to throw this right over to you, Zack. NYDIG does it again.
Yeah, NYDIG, man, they really came out of stealth like with a vengeance. This is big. I mean, I think we've talked about this in various forms, but the ability for these assets to interact with your existing financial services is going to be really quite powerful. I think whether that's a Bitcoin balance in your bank account, whether that's down the road sort of access to decentralized finance protocols that can give you yield, but again through the interface of your trusted bank account. Really interesting to think about how this could play out down the road, and if this is one step of many toward that, really quite interesting. I mean, obviously, 300 million is like, the entirety of the pie, and only a small slice of that pie may take them up on this offer. So that number may be a bit like aspirational, but certainly the reach of this program and this partnership could be quite interesting in terms of making digital assets a part of more people's sort of daily financial lives.
And it's also interesting to see what other products are on the horizon. So apparently NYDIG plans on other services, including perhaps a debit card rewards program, and that would be paid in Bitcoin, and a new type of bank account that's FDIC insured. So these are very novel financial tools they're dealing with there. And as we know, the FDIC has not wanted any involvement with crypto before. They've shut down bank accounts involved with cryptocurrency businesses. So the fact that now NYDIG is saying, actually, we're going to have FDIC insured bank accounts for cryptocurrency for Bitcoin is very interesting.
Yeah, I think this is just a really important step because you're just meeting people where they are. Like, that's huge, right? It's all been through external apps thus far and stuff like that. And so, like, if this is coming directly to you, and I noticed in the reporting too, they specifically mentioned like one small kind of 7-branch bank in California. And that's really important to me because that's going to put it with a whole new audience potentially who wouldn't, maybe be considering this otherwise in a really local way. So that's really huge to be meeting people where they are. But Jen, I'll toss back up to you.
Well, you always say what I'm going to say. I mean, I think this is great. We talk about trust so much in the crypto space that this just feels like what's needed to get the mainstream audience involved in crypto. It's right there in your bank account. People trust their banks. There's this like embedded relationship already. Those technological aspects that we talk about, those barriers aren't there. So this is really great. I wish that this could happen in Canada. There's so many banks here in Canada that still restrict you from
three this week. That's 3 Canada lines.
Every single day. I'm so sorry. But yeah, the banks in Canada are behind when it comes to thinking like this. So it's a great story.
Can I say something quick before we change track there? Because I just think it's important. Like the president of NYDIG, although this is really cool for other reasons, they do seem to be spinning it in a very advantageous way to them that I think is quite deceptive. Because like the president says, most people can't invest in things that institutional investors get invested in. But now with Bitcoin in your bank account, you can purchase it. Anyone can, do it. It's an attractive asset available to everyone. That's huge economic empowerment. It's like, well, no, Bitcoin was economic empowerment and anyone could buy it. Like this is not something that was closed off to the masses. And by adding it to your bank account, you are not giving people extra exposure. I just wanted to mention that little rant because I think it was a little bit untruthful the way they said that. But Ben, what have we got next?
Yeah, well, speaking about kind of meeting people where they are already. So Forbes, which is currently on the market, is in talks and has been offered $700 million to be acquired by Patrick McConaughey's Borderless Services. Now, this is interesting. That's sort of a crypto investment vehicle, but he's kind of re-envisioning taking another stab at the whole idea of blockchain-based media. So in an interview published yesterday on CoinDesk, he mentioned, maybe using crypto wallet integrations with Forbes or tokenized journalism, but also that, this acquisition is, in his view, just the first of many. And he mentioned sort of radio transmitters, other cable and print operations potentially. But I thought this was interesting because not only is Forbes a huge, brand in a lot of ways, and it should be said they already do have a kind of crypto reporting arm, but this seems to me to be a reiteration of something that we saw maybe in 2017 earlier, but that first stab at blockchain-based media. So we can dive deeper into the reports. But Naomi, you work in this area a lot, kind of as a content creator. What are your thoughts about what this could mean were Borderless Services to acquire Forbes?
For sure. I mean, first of all, looking at the numbers, it's fascinating to me that $700 million to buy Forbes. And earlier in the show, we were talking about billions of dollars to, buy a brand new company. Forbes is an established media company. It's a well-regarded company that's been around for over 100 years, right? And so it's very interesting to me that these old established players, like we're really ushering in a new world when it comes to all this decentralized technology, whether it's decentralized tech in the crypto space or whether it's, decentralization of media itself. I'd be very curious to see what he means by reinventing media using crypto wallets, tokens, and radio transmitters. There's a lot of buzzwords in there, and that could go in so many different directions. I'd actually like to see what the plan is. Obviously, we have media outlets that use tokens as a way to incentivize your advertising and tips and revenue, all of that stuff, like in the form of things like library. So are they thinking of something similar? Are they going a different route? I'd be very interested to hear more details on that. But Will, what are your thoughts? Any insight into that?
Ooh, insights into tokenized media? It's a big ask, but I will give a stab at it. So I think there has been a lot of plays at making this work, and a lot of them have failed. Civil being, I think it's Civil or Civic has been like the poster child of failed blockchain media attempts. But on the other side, you do have some that have been somewhat successful. I think Brave browser, for example, they tokenize advertisements on their browser, and they're not a media site, but they have figured out kind of how to make attention and eyeballs to the screen be monetized. So there are ways of doing it. I think that these ways become more practical as more people are onboarded into Web3. So once people have MetaMask installed natively into their computer, would be a boon for a lot of media sites trying to tokenize attention on their websites. I think another thing that's kind of underreported on this side is just the tax implications and ways of making that work. So micro streaming payments has been one way of incentivizing people to pay for maybe like one article here and there. You pay like 25 cents and it's streamed from your crypto wallet immediately. Well, that becomes a taxable event. And so it's very hard to get people to micro stream because it's just like the law is in the way. So I like the idea of somehow incentivizing journalism to be paid through tokens. I just don't think it's there. I don't think it's going to be there for a while.
Jen, go ahead and then I'll jump in.
Wow, thanks, guys. So we're talking about tokenization, and the story wasn't super clear on what kind of blockchain applications they were looking at for Forbes. But I do think there's a really strong use case for blockchain empowering journalists in terms of proving ownership over the content you create and being able to see who uses that and throughout all of its life online. I mean, I've definitely created content online, and it's been used and shared all over the world, and I haven't really had proper visibility into that. And if I did, and I think we could do that using the blockchain, if I did have visibility into that, I may be able to, monetize that and take the credit for that. And so we're always talking about that in journalism and in creation. It's just like being able to claim our ownership over our content. And I see a real use case for blockchain in empowering creators there.
On that note, for sure, like monetization on the internet is such a hugely important issue. And when we first created the internet, we realized, first off, your micropayments weren't possible without traditional financial infrastructure. Cryptocurrency came along and changed this. And suddenly there was the hope of things like what you were talking about, Jen, and monetizing, through just sending small tips to people, pay-per-view, that sort of stuff. And then, you have, because crypto wasn't around when the internet was developing, it completely changed track. It went to this advertising-based model, and now all of our data is monetized, and that's how they make money. Obviously, the government's going to keep taxing crypto out of existence because they want access to that data that's constantly being mined from this advertising model that the internet's based on. I hope that changes for all of our sakes and for our privacy, and I hope that crypto can become the solution that gives us back power over our data and power over our work, our creative work, as Jen was mentioning. But Zack, you want to take us home?
Let's go home, guys. Let's shut it down.
Let's go.
Good episode. Good episode of The Hash. Couple candidate mentions. Some good rants. I think that was pretty solid. Pretty standard fare.
Zack.
Good stuff. Good stuff. All right, cool. Well, that's it for today. We'll be back tomorrow, I think, to talk about more crypto news, and we're really looking forward to it. Hey, if you want to watch more CoinDesk TV, 3 p.m. Eastern, all about Bitcoin. Check that out. Until then, we all say goodbye to you and we wish you a happy Wednesday. Have a good one. Bye.
Happy Wednesday.